Welcome to the Kinvestor Report, where we sit down with industry experts to discuss the latest developments in the Canadian small cap sector. I'm your host, Arlen Hansen. Standard disclaimer, no part of this interview should be construed as investment advice. And as I don't know what stocks we're talking about today, Kin may own shares or be compensated by the companies that we discuss in today's interview, and I will make further disclosure on that. Today, I'm joined by Jay Martin, host of the Jay Martin Show on YouTube, where he interviews the world's top analysts to get an inside perspective of the investing world, and also the host of the Vancouver Resource Investment Conference, VRIC. Jay, welcome to the show. Thanks for joining me today. How are you?
I'm good, Arlen. I'm glad to be here, man.
Yeah, right on. So let's give our listeners a little history of your background in mining, commodity investing. How did you get in the game?
Sure. So, I don't know why, but at like 14, 15 years old, Arlen, I had this huge appetite for geopolitics. And I used to like sit at the kitchen table and tear up the newspaper and find stories that like, for whatever reason, man, resonated at that time. And one specifically, I don't know why this stuck with me. It was kind of like a hook for me. And that was when Hugo Chavez won the election in Venezuela, because it was a really big thing. And I didn't understand why it was a big thing. I couldn't tell capitalism from socialism, at that point in my life. And when you're young, actually the socialist narrative like resonates, right? You're like, yeah, for the people, man. Like I'm here for the people. And that kind of hooked me into like the storylines that govern our world though, and from there I just got hooked, man, on why power is distributed around the globe the way it is, right? Who holds power and why. And if you keep on following that thread, further and further and further, eventually you get to the most basic principles that govern our world as I interpret it, which is human nature, right? Like how we are with ourselves, how we are with each other, the psychology of decision-making, behavioral economics, all this stuff. And then raw materials, right? It's like, what do we have access to with which we can put to work? And on top of those two things, how we are with each other and what we have access to, we build economies and currencies and technologies and all of it, right? It all kind of is built on top of that. And so I still think about the world that way today. Like, it's commodities, for example, or raw materials that are just a nice lens with which you can use to interpret the world, because, in finance, we always say like, follow the money, that'll lead you to truth, right? Like what's really going on here, follow the incentives, follow the money, but the money follows raw materials, generally speaking. And so you can go a step further. And, obviously we're watching that today. We've watched that for the balance of my life. The wars are often fought over who's got what the world needs at that moment. But if you look through history, you'll find that, we've hunted down, when tobacco was the commodity of choice, nutmeg, we went to war over nutmeg, right? Rubber, we went to war over rubber,
Tulips,
man. Like there was like
BD babies.
It could be the case, Arlen. Like, there's I wrote a newsletter recently about the banana wars, which is like, it sounds like a silly concept, late 19th, early 20th century. But the banana wars were like a 40-year period where the United States went to war for bananas and invaded Honduras, Nicaragua, El Salvador, Cuba, and tens of thousands of people died, right? To protect the United States. It was the United Fruit Company's interest in those countries.
Oh my
And
gosh.
so it's the same principle. We will go to war to get access to the resources that we need, whatever those resources are. And so therefore, like understanding the resources that are important today, because it's not nutmeg anymore, right? It's not rubber, right? It's generally speaking oil, but I think we can have a bigger conversation about what might be next. It tells you a lot, right, about why things are the way they are and why certain geopolitical events matter and some don't, et cetera, et cetera. So it's fascinating. If you like, fiction, there's no fiction better than just real world history. It's like, oh boy.
Well, I was just listening to your recent podcast, and I really appreciated what you'd said about we've been at war forever, just for different reasons. Right. And
100%.
like how true the currency wars, commodity wars, you name it down the list. Right. So, okay, awesome. That's a good little background here. So you've launched the Commodity University. Can you tell our listeners more about that and what you're trying to get out of that?
Certainly, man. Yeah, I think so. It's of my opinion that this decade is like a generational wealth creation opportunity. I can explain why, but this is the era to look at value, to look at commodities. And so at a super high level, the reason I feel that way is because my whole life has been the era of globalization, right? Increased sharing of goods, global marketplace, trust existed, fragile as it might have been. It existed enough for the world to function as one big shopping store. And if you had the cash or the credit, you could buy whatever you wanted, whatever your country or multinational corporation needed from whoever had it, and that era is over. That's what I think. I don't think whatever happens next is going to be like simple, quick, or predictable, but that era is over. And, the geopolitical chessboard has been shaken up. There's new battle lines being drawn. And all that says to me is like, what you thought you had a secure and stable supply of is no longer secure and stable. And when the ingredient or the material, whether that's copper, oil, grain, you name it, becomes unpredictable and a bit uncertain, the value of that thing goes up because you're not sure if you can get your hands on it, right? And so that's the era we're in today. And that's the era that will govern us for the next 10 years. It's the era of commodities. And so we've seen like this surge of new investors show up at our podcast, newsletter, conference and ask me the question, Arlen, how do I get started? And I haven't been asked this question a lot over the last like 15 years, but in the last 2 years, it's become a tsunami of investors saying, how do I get started in the commodity business? And as you know, there's like 100 different ways. And they're all kind of right, depending on what
you're going to get it wrong 100 different ways until you learn, right?
100%. Yeah, exactly.
Yeah. So your university, is it based on like, hey, these are my stock picks, or is it more looking at the big macro picture of, of what you're talking about here?
Yeah, it's both. We don't get into specific stock picks, but if you are looking to pick stocks, we go through the mechanism to help eliminate the bad decisions, right? Which, as you know, and especially like where I play, which is early stage companies, you can't ever guarantee you've picked a winner, but you can do a lot of work to eliminate the bad decisions, and that's what you should do. So the Commodity University, we start with the most fundamental principles, like literally, Arlen, the first chapter is what is a commodity, and by chapter 10, it's portfolio construction. And in the middle is like what economic indicators really matter. What are the supply and demand dynamics you should pay attention to? And then we do deep dives on, because my focus is kind of the metals. We do deep dives on the gold market, silver market, copper market, uranium, energy metals, and walk people through like how to build a portfolio and take part in the commodity super cycle. So
which is here for sure.
I agree. I agree. Yeah. And so thecommodityuniversity.com really easy to find. But
cool. Yeah. Well, we'll put your link in the profile, of course. So you touched on it earlier, and this is something I've been kind of pounding the table on, and doesn't feel like I'm getting any traction. But now that you're saying it, I feel like we can misery love company. Do you think that we're in a supply-driven bull market or a demand-driven bull market in commodities? As in, are commodity prices going higher because of lack of supply, or is commodity prices going higher due to increased demand? What do you think that where we draw the line there?
Okay, so I think both, but the emphasis will be on short supply. And that is a consequence of some of the geopolitical factors we just discussed. We won't be able to get our hands on graphite like we used to because, and there's special deals occurring, right? Like countries are weaponizing whatever it is they have. The US has weaponized the currency. Russia is weaponizing their currency, which is energy, right? Not the ruble. That's what they have is oil and gas. And they're now selling gas, for example, to China at 50% the cost they're selling to Europe. And they're cutting certain countries off completely. So, that creates scarcity on the supply side. So that absolutely is a driver. But in addition to that, for the last 15 years, throwing cash at FANG stocks has been such an easy game to play that's where the majority of capital has gone, and just to speculative growth. And as a consequence, the productive industries have been starved of capital. And so we haven't created any new production of almost anything. So like take copper, for example, we're looking at a pretty severe copper shortfall, but
it's incredibly scary. Like what it looks like. Because we know the capital it takes to put a mine in production. We know the challenges of the permitting and all that jazz. And I think I read a quote from, correct me if I'm wrong, I think it was the Glencore CEO 2 days ago, said every copper mine that was planned to be built has been built.
Right. Okay.
What's next?
Yeah.
Like it's nuts. And we've seen, a lot of the majors step into British Columbia. Right? Like Boliden, Teck, the list goes on, Freeport. And obviously we saw Barrick step into Hercules Silver yesterday. It's like you see these majors going, wow, how do we position ourselves in safe jurisdictions for the copper crunch coming? Because
Oh,
it's coming.
100%.
And
100%.
it was the Freeport CEO that said copper could triple in price and it would still take us like 10 years to increase our production.
Well, that's the thing, right? And, Ross Beatty was on my stage last year at the VRIC, our conference in Vancouver. And he came out and said, he's like, we don't have a shortage of copper. The problem is it's all underground and it's going to take tens and hundreds of billions of dollars and a few decades to get it out.
Yeah.
So in the interim, yeah, we have a serious supply issue, but it's here. We just haven't been hard at work. Yeah. And so it's almost like an innovation problem at this point, because how do we expedite the extraction? I mean, prices will solve that, or they'll try to solve that, right? Skyrocketing prices will definitely occur because the scarcity of the materials we need. But it's not a simple fix, man. You're absolutely right. You can't just snap your fingers and create a copper mine. It doesn't work like that.
Yeah, and it's also been lack of investment, right, over the last decades or whatever, right?
Well, that's it. The renewable energy sentiment, on the surface makes sense. Like the transition away from fossil fuels. We can all get behind this, man. I got 3 young kids and I spent a lot of my life in super remote parts of the country. I understand what we stand to lose if we don't take care of our environment, like probably more so than most, to be honest. But do we think that the same protesters with the leave the oil in the ground signs are now just going to turn the sign around and the other side says, and permit every mine because we need the ingredients to build the renewable energy infrastructure, and we don't have it now. We need the copper, the nickel, the cobalt, et cetera. Yeah, it's not going to happen, right? It's just no one thinks through step 2, though. It's like, okay, yes, transition to renewables. Great. What's step 2? Shit, we didn't think that far ahead, So we need that stuff that we don't have, right? So it's a predicament, man.
Yeah. Well, I think that sentiment's going to change. And I think we're seeing in the Canadian political landscape, not to diverge or divest too much, is like all these people that did vote for Trudeau are now the ones that are being the maddest about inflation and the cost of living and et cetera, et cetera. So there becomes a tipping point in all this.
Yes.
And it feels like we're starting to come there, right? People are starting to realize that we need these things, but it will be a slow process, but there will be a tipping point where all of a sudden it goes the other way. It always does. Everything cycles, right?
Yeah.
So,
and Canada, by the way, just because you mentioned it, is set up for success here. Like we came through the 2008 financial crisis with a healthier balance sheet than any other G7 nation because we had a leader who leveraged our natural resource economy. And he said he was going to run a deficit, but keep it temporary. And he did. And he said he would run stimulus, but keep it temporary. And he did. Like these are promises you don't hear anymore, right?
Mm-hmm.
I hope Canada's learning a lesson. What happens when you elect somebody because you like the haircut, or they're fun, youthful, right? Like now we're staring this problem in the face. The biggest criticism of Prime Minister Harper was that he was boring, right? And it was like, what does that mean? Like he sat down and did his job? Is that what that means? Like, great.
Yeah. Give me boring and competent any day. Right?
100%.
Than somebody 100%. Who's charismatic and causing chaos.
Exactly.
Right.
100%.
So in your letter and your commodity thesis, are there any commodities in particular that you're super keen on because of your thesis? Like you got to believe energy related commodities, but I'm going to let you speak.
For sure, man. I'm bullish on the energy sector. Absolutely. And so like I can't time the market, Arlen. I guess, as you know, like I got no idea.
What?
When
okay, show's over.
And I think that investors make that mistake quite often. They try to time markets, or like for example, if I mentioned that I'm building a position in XYZ company in my letter, my subscribers assume that means I think the price is going to jump in the next few months. And that's not
tomorrow.
Exactly. And if it doesn't, you hear about it, right?
Yeah, of course.
Or heaven forbid it corrects a little bit. So if I can't time the market, what I can do, and what every investor can do actually, is determine what's cheap. And that should be your mission, right? Is like buy things when they become cheap, sell those things when they become expensive. That's the game we're all playing, sort of like a merchant in that regard, real simple. And right now, also because it's my area of expertise, I guess, I love the mid-tier gold producers because everybody hates them. Yep. And I can walk in with zero competition, build positions on the open market, with great management teams in good jurisdictions. And when I say a great management team, what I mean, because everybody says that, is like they built and sold a couple companies in their past. So success tends to beget success. Yeah. Despite that, despite good assets, despite cash flow positive businesses, nobody loves this business right now. And so it's great, right?
It really does feel that gold stocks and silver stocks are like the most hated assets in the world right now. And this is when we buy. And you do need to have longevity because we don't know when it's going to turn. Right. But yeah, exactly. They are so hated right now. It's remarkable.
And like, what you should think about when you're building a position is it's a transaction between me and somebody else. We don't think about that so much when we're investing in a company. Like if you're buying Tesla stock or Nvidia, investors often just plug into Robinhood or Wealthsimple and think they're hopping on a roller coaster. But in reality, like it's a disagreement that you're having with the seller of that asset. Like somebody's selling those shares to you. And so I always try to think like, what do I know that they don't? Because I'm making the assumption this is undervalued and going to go up. But somebody else is saying, no, I think it's overvalued and the price is going to go down. So why am I buying when they're selling? And if I can't identify what I probably know that they don't, I really need to think critically about what I'm doing in this arena because I'm squaring off against somebody, right?
Mm-hmm. You're saying I'm more right than you.
Exactly. Right. So what's in my back pocket? Like what's my competitive advantage here? Right. Yeah. And in the case of, precious metals companies right now, it's real clear to me because that market was super hot in 2020 and it spilled into 2021. And that hype attracted all kinds of new capital to the industry. Lots of new retail investors piled in and built positions at that top. And then in 2022, prices corrected to the tune of 40% in some companies, but nobody wants to take a loss. So they hold on, they wait for the recovery. And then 2023, now they're down 60, 70, 80% in some cases. And they don't want to take a loss, but now look at the broad economy, right? Like credit card delinquencies, suddenly all-time highs, auto loan delinquencies, creeping towards all-time highs, mortgage delinquencies, same thing. New credit card application rejections at all-time highs. So consumers are being squeezed. They can't afford their monthly budget. They're reaching out for new credit that used to be available, not getting it. There. They need cash.
They sell
even
stocks.
Though they put 20 grand in XYZ company and it's worth $4 now, they need that $4 grand.
Yeah. For sales.
And that's predatory, but that's capitalism. That's what we should be doing is moving in at times like this, because now I understand the seller's mentality back to that, right? It's like, I get why you're selling. I understand why I'm buying. This is a transaction I'm okay with because I do feel I have a competitive advantage here.
Yeah. And so, also like having that conviction is so important, right? Yeah. Like you like to make your 10 bagger, you need conviction because we never time it perfectly. Or very rarely. No. I think I've had one or two where I time perfectly, but very rarely you do. And being able to sit on that conviction, no matter what the stock does, is very difficult. But if you have that conviction, it can be done. And that's where you're going to get your multi-baggers from. But so few people do enough due diligence, come up with that own conviction that their fear and emotion or liquidity crisis puts them in a position where they have to sell and take their loss. Right. So but back to the question, we kind of diverted a little bit. What commodities are you kind of most keen on right now as we look at your grand thesis of where we are geopolitically?
So if you just look at my portfolio, that's a good way to answer the question. I'm heavily weighted into gold and silver. Okay. I like my copper exposure. I'm much more specific there because the exit strategy for an early stage copper company is far more limited than the exit opportunities available to a high quality gold or silver deposit, right? If you discover an economic deposit in gold or silver sector, there's hundreds of suitors that might acquire you. Financing internally and building the mine yourself is also achievable. You don't see that in copper, right? There's maybe half a dozen companies that could actually finance the copper build because it is tens of billions of dollars. And so you have to be a lot more specific with your selection there. And so everything becomes amplified, quality of the mineral, of course, jurisdictional risk, relationships of the management team, all of this stuff. But, definitely gold and silver, my heaviest weighted right now because I understand that market the best. And again, it's cheap. It's just super cheap right now. And, And I have definitely some heavy exposure to the uranium sector, but it's very specific. It's actually one company that I'm just really invested in. It's super speculative, very early stage, Western Athabasca company, and you can get into all that if you want to. Yeah.
Oh, you're allowed to name it if you don't care.
Yeah, oh, sure. So it's a full disclosure. I'm a director of this company
Okay.
and a
Yeah.
very large shareholder. They're called Stallion Uranium.
Oh, okay, cool.
And, yeah, they've been very quiet over the last 18 months, just acquiring property
Yep.
in the Western Athabasca. They're now the largest landowner. They've got the largest land package in the Western Athabasca. And the reason I'm so invested in this company is because the two individuals who have been directing this land acquisition have been Stephen Stanley and Matt Mason, who built Hathor Exploration and sold to Rio Tinto in 2012 for 620 million.
Yep.
Also very involved in the founding and building of NextGen and Atha Energy. And so they know uranium, they know the basin, the highest quality uranium in the world comes out of Kazakhstan, obviously, goes through the port, St. Petersburg. Yep. That supply has been compromised and will continue to be so. So the world will need new supply. And so I think all eyes are on Saskatchewan. So looking for positions there is smart. And I believe NextGen is going to get all their permits and move forward with that line.
Yeah, for sure.
That's what I believe.
So here's a little history you probably don't know about me, but Stephen Stanley was the best man at my wedding.
No way.
I've known him since he was like 3 years old.
Right. Yeah.
He brought me into the business.
Okay.
And I was with him from day one on Hathor.
Yeah.
All the way to takeout. And after that, I took NextGen Energy public into my shell.
I didn't know this.
And then after that, we continued to spin out the ISO asset, and I work with ISO, and we still continue to work with ISO Energy. So I love uranium. It's probably paid for both my houses.
Oh boy. Yes.
But yeah, Steven's an awesome guy. Matt Mason has been incredibly successful. And I know that the Stallion Gold deal very well. Full disclosure, I'm not a shareholder. I just like to be transparent with everybody on the show about what I own or what we get paid on and things like that. So cool. Well, you're certainly not alone in the uranium thesis right now. It's, it had the Cameco chart's pretty unreal. There was certainly some blow off top there for a little bit, and we're seeing a little bit of correction in the stocks, but I think we're very much in a huge uranium bull market, and that's the whole energy thesis, clean energy thesis. That it's really the power load that's going to make this happen, right? The battery metals, you still got to mine, you still got to put power towards it, but you still have to load the grid, right?
Absolutely,
and that's going to come from uranium. Bottom line.
Yeah. And for investors who are entering that sector, you got to remember there's always two factors at play. There's the supply and demand dynamic that you just discussed, and that's a long-term thing because it takes a while to build new reactors and get supply to market and all this stuff. And I'm very bullish on that long-term trend. But in the interim, you got to always remember, like, traders also get involved with much shorter time horizons. They overbuy and they oversell, and they overbuy and they oversell. So in the course of those secular bull markets, you're going to see corrections, but that doesn't compromise the big picture trend. You just got to understand there's two people playing with the same puck, and they play with it differently, right? And so don't get shaken out, right? When you see that short term, I mean, you do you, but a lot of investors get shaken out because of the short term volatility that does not compromise the long term trend, but they forget their time horizon, and then they get sucked in emotionally, right? So they make short term decisions, even though they're supposedly long term investors. So yeah.
So you're heavy weighted on gold and silver. Do you want to rattle off a few names just generally like that you love on the mid-tier or gold producing side?
Yeah, man. Yeah. I mean, I'm a big fan of Orezone Gold. I think it's just an incredible management team, good jurisdiction, high grades. And I've had Patty on my show many times, solid leader, I believe. Vizsla Silver, another company I'm actively building a position in. I think there's lots of upside there still.
Yeah.
Largest undeveloped silver property in the world, most likely. And Michael Connor he's the right bracket for me, in that he's young enough to have a huge chip on his shoulder and wants to prove exactly what he's capable of, but he's experienced enough to surround himself with great individuals, and his executive team kind of plugs all the holes.
Yeah,
100%. He feels weak anywhere, he knows how to fill those gaps. Caliber Mining, another company that I'm actively building a position, and I'm just building on the open market, by the way, Arlen, just like any retail investor can with all three of these companies. So, I'm not waiting for financings. I don't feel the need right now. I like the prices, and it's just quiet. I mean, all three are quite quiet on the market right now. So as I said, I can walk in with no competition Just yesterday, we hosted a summit on, I have another YouTube channel called the VRIC channel. It's sort of our conference YouTube channel. And we had a summit on that channel with a bunch of stock pickers. And the most frequently picked names were Snowline Gold, Hercules Silver, and who else came up a bunch? Tectonic Minerals came up a bunch.
Okay.
Newfoundland Gold, of course, common pick.
Yeah.
But definitely some companies to take a peek at for sure.
Yeah. Okay, cool. So you talked about like management and solid leadership. When you're looking at a deal to invest in, what's more important to you, the management team or the asset?
So for me, and I think that there's no right answer to that. It's all about like, what's your competitive advantage? It's absolutely the people. I'm people over everything every single time. And I get a lot of crap for that. Like, mutual friend of ours, Brent Cook, has called me out actively on my own channel. Be like, you're missing a big piece here by not focusing on the rocks. And I just tell him, no, Brent, you're a geologist. Like, you focus on the rocks. Like, I talk to people for a living. I host a podcast, a conference. Like, this is my competitive advantage, and I can't be an expert everywhere. So you got to find, where can you be an expert? Where can you outperform? And then really focus on that. That's what I believe. I'm not a mining engineer. I'm not a geologist. I'm not a technical analyst, but I'm in the people business. Yeah. So that is the game I can play better than most, I believe. And my thought, Arlen, is that if you get the people right, it does insulate you from a lot of the bad decisions, right? Like, 100%. A great manager is not going to be in a bad jurisdiction. A great manager is not going to pursue a bad asset. A great manager is the most important resource in junior mining isn't the metal, it's cash, right? Access to capital when you need it. That's number one. And so,
and raising money at the right time versus raising money out of desperation, and being able to build a business plan around, like, I don't care even if you're an exploration company, I never see these companies actually build business plans and look at their cash flow and be like, oh, we're going to need money in about 9 months from now. So when do we start our marketing efforts to raise capital? Instead, they all, within 30 days of running out of money, they run around, and then overdo. Yeah. So I'm with you. I'm on management 100% of the time, because good management will know a good asset. They'll stay out of shitty jurisdictions. They'll be able to raise capital. And I have seen so many times countless good assets get blown up completely because it's just not managed properly.
100%.
But we are in this business where you don't need a formal education, right? You can get a little bit of money behind you and raise a little bit of money and think you can do this on your own without experience. And this is where so many people fail, right?
Absolutely.
Yeah. So yeah, you talked about, like, there's no competition in this market. You can pick your names and acquire positions. Why is the Canadian markets having such an incredibly hard time raising capital and creating liquidity, except for those very few select names? I think I saw the stats, like year over year volume versus money raised, and the numbers are shocking right now on how abysmal it is. Now, I look at that as opportunity. Yeah. Right. Because I know that I can take my fear and greed out of all of this. And I know that everything cycles. Right. Of course, timing, who knows? But what's wrong with the Canadian market right now? Do you think it's a broken system that everyone's, oh, this is a broken system, or do you think it's just fear and greed? And what's, the Canadian market for generally has not been working for people for a long time. And it's literally PTSD and I'm done.
Yeah. It's a good question. I think there's definitely some stuff there on, like, the mechanism of financing and how a company lists on an exchange and gets access to that capital, and the costs incurred during that process. And, but I think, speaking more simply, it comes down to that fear and greed balance. And right now, the weight's on fear. That's what I think. I think getting 100%. Back to, those metrics, right? Like, people are squeezed right now. I know a lot of people who are hurting and they're very tight. All those data points we discussed, credit card delinquencies, auto loan delinquencies, mortgage rates. 70% of new mortgages in Canada in 2022 were variable rate. That's a reckoning that's coming, and it's already hit some folks. And so, as a consequence of that, how much risk capital is available? Not a ton right now, right? Now that will change, because I think in addition, people are looking at the bigger game, right? The global game, this shift of one era to the next that we're going through, right? Whatever you want to call it, de-dollarization, de-globalization, et cetera. Hot wars are breaking out. Like there's a lot of volatility. And this decade has smoked us, by the way. Like every year we've been hit with a haymaker every single year.
Yeah.
We're just getting started. Like it's 2023. I don't think it's done with us, And so there's a lot of reasons to be conservative and fearful right now. So I totally get that. One thing that occurs, generally speaking, as a consequence of times like this, is that safe haven assets become in favor, right? And, we're starting to see that with the gold price now. And we've been watching that activity in the gold market for the last 36, 24 months, just from central bank buying. Some of the biggest buyers of gold, they've been setting records, like 50-year records. And the rolling 12-month gold acquisition for central banks is like over 1,200 tons. Like it's colossal amounts of physical gold being taken off the market. And these things take time to trickle down, right? To really matter when it comes to just basic gold price, actually. But, I think eventually that fear causes the value of safe haven assets to rise to a point that greed kicks in, and then people want to take part in the price action. And if you're looking at these safe haven asset prices go up, then you want to find, I want to find the torque. So where can I participate in the gold price? But I don't want to see I own physical gold for retaining purchasing power, but that's not where I go to create wealth. I look for torque when I want to create wealth. And so I go down the food chain. Right now, for example, I'm buying gold producers because they're cheap right now, but eventually it'll be time to go even lower on the food chain down to the developers and the explorers. But I don't need to go that risky right now. So even like me, I'm a pretty big risk taker in the market. I'm not going as risky as I will go, probably 12 months down the road, And so I think that same symptom affects everybody. And our risk tolerances aren't super dialed right now. Like we're a bit more conservative and just discretionary income. It's unavailable to a lot of folks right now. And so, all these factors do make a difference.
Yeah, and I think we've been in a prolonged, very difficult market. We all deal with fear and greed in our lives, and we all have different situations. But like when you start losing money for a long period of time and you start getting very fearful of your future and like, how am I going to provide for my family? How am I going to provide for my children? Our nervous system gets deregulated, right? And like when our nervous system gets deregulated, we start making irrational decisions too, as well, because we're not connected to ourselves and our values and our convictions, right? And I think it's very easy to be disciplined right now, because it's easy to say no to everything because of this fear but the times that we need to be disciplined is when things are really good. Right.
Yeah, exactly.
Right. So it's an interesting dichotomy. So we did talk about this. We've seen an incredible amount of central bank buying. I got two questions. What does China know that we don't? Because you talked about that war between a buyer and seller. So China thinks they're right. Whoever's selling it thinks they're right. Right. But then I guess my second question in this is like, why is gold trading at an all-time high in all these other currencies, but can't seem to find its foot in US dollar terms?
Yeah. Okay. So a few things there. I think if you're in, China's seat right now, it is in your best interest to create some optionality outside of the US dollar. And how do you do that? Right? Like, how do you actually inspire a significant percentage of global trade to occur outside of the US dollar system? Because there's not a lot of options there. And we're seeing this de-dollarization trend definitely pick up steam. And, it's covered by a lot of respected analysts in the space like Luke Groman and Grant Williams, and it's catching more steam. These transactions are still just occurring kind of on the margin, because if you're Russia, for example, world's largest commodity exporter, you think that's a good place to start, where you could be selling commodities to the global marketplace outside of the US dollar. But who do you sell to and for what currency, right? And you can sell for yuan in China, and you've got a lot of options that you can spend your yuan on. But if you're selling gas to India for rupees, you have far less options. What are you supposed to do with rupees on the global marketplace? I mean, nobody really needs them, And so how do you provide infrastructure that actually allows a de-dollarized global economy to scale? Well, it starts with trust. You got to believe, right, that whatever currencies we're dealing with are supported by some kind of an asset. And that's kind of gets back to like the principles around the gold standard, right? Like That's why the US dollar was able to establish trust in the global marketplace, because it was at one point in time backed by a physical asset, which supposedly the United States had. And dollars were just promissory notes that could be redeemed for physical gold. And so, I'm really curious about China's gold storage. I bet you they have a lot more than they claim.
You can tell us? Oh, 100%.
They're the world's largest gold producer, and they don't export any of it. In addition, they're one of the world's largest gold buyers. And so,
what do they know?
Exactly. I think that they're expecting increasing population of global economies to lose trust in the US dollar because of how reckless monetary policy has been coming out of the Federal Reserve, and how quickly they've devalued that currency because they need to paper over their losses and expand the money supply to do so. And that puts that whole trust system on notice. I mean, we're long overdue there. And you see this, by the way, during the sunset years of every empire. Like if you look back through the last 600 years, you see the rise of the Portuguese Empire, the rise of the Spanish Empire, and their respective world currencies. Portugal had a reserve currency. It was kind of maritime specific, but it was by definition a world reserve currency during that era. Then the Spanish Empire, the Dutch Empire, the British Empire, now the American Empire. That's 5 inside of 600 years. So it gives you a bit of a hint at the expeditious nature with which power rotates around the globe. But during those sunset years, you always see the same things. You see a country get over its skis in terms of expenses and budget, and they paper over that deficit by expanding the money supply, right? Which generally contributes to an increased wealth gap within the population. And that creates this disenfranchised population, which manifests in populism. And you see civil unrest begin to erupt because some people are getting really rich, some people aren't, and those that aren't can't understand why. So they pick an enemy and start incriminating that enemy. And this accelerates to a point that begins to kind of border on civil war. So you see, an insolvent state, which is aggressively expanding the money supply. You see internal unrest that begins to border on civil war. Like, does that sound familiar? And then you see the external competitor. That's the third piece that you always see. It's the external country that begins to rise up and actually challenge that global superpower. And when that occurs, historically, it hasn't been one country. It's been a syndicate of smaller countries that are able to park their ideological differences in order to unite against that global superpower and unseat them. And again, it's like, we can tick all 3 of those boxes right now. Literally,
we can. 100% we can. And I actually believe, like, for people who don't think the US can have a global collapse, or like it's happened every time.
It's happened every time.
I don't know why we think we're immune, why we could be immune to this.
Well, I would bet you that the citizens of the Portuguese Empire, the Spanish Empire, Dutch and British felt the same way. I mean, you're born into that era, right? This 100%. Is everything that I've known. My grandparents were born into this empire. My kids, it's like, this is the new world, and this is the world that will always be. And it's realistic and logical to believe that. But if you step back and look at history, very quickly you realize, oh, no, that doesn't work that way, right? Like, actually the same thing, not only does power rotate, it rotates for the same reasons. And each of these empires went through the same process, and we're just going through it now. And this doesn't mean that, I think the US empire is going to crash in the next decade. That's not what I think at all. I think it's still the, strongest economy in the world. There's a lot more tools in the tool belt. And when you think about the robustness of the US dollar, I get a lot of gold bugs to be like, it's not backed by anything. It's because they removed the gold standard. And like, well, no, it's backed by the net asset value of the United States and its education system and entrepreneurial community and medical system and, military strength. And all these things matter, right, to the net asset value of that country. And, a metric that I watch, Arlen, is like every year the UN gets together and they vote on a bunch of stuff. And over the last 2 years, one vote they've executed was whether or not to condemn Russia's invasion of Ukraine. And in 2022, they did it, 2023. And both times it was like 141 countries voted to condemn and 38 abstained or voted not to condemn. And that tells me, you could say they're voting on whether or not to condemn Russia, but really it's like a proxy vote. Countries are pledging their allegiance to the East or the West. And at present, there's still 141 countries that are saying we're sticking with the US. But there's 38, and of that 38, I think 32 abstained. And then there was 6 that said, no, we're not going to condemn Russia. We're on Russia's team here. But there were 32 that abstained and just said, we're not quite ready, right, to throw our hat in with one party or the other. There's too much up in the air. We're concerned about the reckless behavior of the United States, continually falling into more wars they can't afford. They're, rapidly printing money to paper over all this, and that's not sustainable. 32 trillion in debt now, $2 trillion deficit. Eventually, this party has to end, but they're not quite ready. And so we're seeing this shift begin to occur, but more countries are. That's what China's seeing. What do they know that we don't, or that the rest of the world doesn't? I don't know, but they are making that assumption that this is not an event. This is a trajectory, and we're on a trend here, and this trend will continue. And a couple transactions outside of US dollars are not isolated events. They're part of a trend, part of a trajectory, and that trajectory will continue to heat up and over time become more influential. And these small transactions won't just be on the margin, they'll be bigger than that, and they want to be prepared for that outcome.
That's awesome. So yeah, to my listeners out there that want to learn how to get involved in this trend that Jay is talking about, and makes a lot of sense, and I firmly stand with him and believe in the same thesis. Please go to commodityuniversity.com. We'll put the link at the bottom of our pages too as well. And once again, if you enjoyed this interview, be sure to join the Kinvestor Network as well. Subscribe to our channel, comment our videos below, and share with like-minded investors. Be sure to check out what Jay's doing. He's an awesome guy. Great integrity too as well, and I think he's bringing a lot of value to the market. So we'll sign off then, and we'll see you again.
Thanks, Arlen.